It appears that the Chinese economy will crash within the next few days. This is the story of a significant shift in the Chinese economy, a tale of arrogance and excess, but above all, a tale of debt. The Chinese economy is booming right now, in large part due to the Chinese real estate market, which has been accused of operating a massive Ponzi scheme involving over $9 trillion, making cryptocurrency appear insignificant in comparison. In fact, Chinese citizens are so frustrated with their housing market that they have boycotted more than 300 of these unfinished projects, which span 90 different Chinese towns, in just 1 month. Also, there are individuals physically protesting in the streets right now, pleading with the banks to return their deposits and cease making mortgage payments on unfinished homes. The banks are responding to the Chinese people by sending in more police forces and in some cases, military tanks to stabilize this situation, as housing demand has fallen to 16.9%, the lowest level since 2016, and home sales have plunged 25%. Because China's economy is the second largest after the US, the effects of this catastrophe will be felt throughout the entire world. Therefore, what occurs in China will undoubtedly have an impact on the rest of the world, including the US stock market, which is another reason why there are such high levels of tension between China and the US. Because the US naturally wants to know how bad things may possibly become, it decided to examine the financial statements of some of these corporations. However, mainland China and Hong Kong are the only two countries in the world that forbid these inspections due to privacy concerns. Because of this, not just one but already 5 sizable Chinese-owned enterprises have voluntarily removed themselves from the US exchanges. Around 300 Chinese businesses, including industry titans like Alibaba, with a combined market worth of $2.4 trillion, are in danger of being delisted. Therefore, it appears that the US has already begun to prepare for impact, and at this point, all we can do is wait and see. And so, this is Investing Path, and we'll be giving you a brief glimpse on what is happening right now and how this will influence us today. So, let's get started. We'll explain what is happening and how it will affect us, but first, we must explain how we arrive at this point. We get here thanks to a business called Evergrande, which was one of the China's largest real estate developers last year and went into financial default. Evergrande is currently thought of as the Chinese equivalent of Lehman Brothers, which is already a very bad thing since, as you may recall, the 2008 global financial crisis was partially brought on by the fall of Lehman Brothers in the US, and this story now kinda begins in the same place. For instance, the rate of property ownership in the US is approximately 65.8%, whereas it is more like 90% in China. That's partly due to the fact that purchasing real estate has always been seen as a wise and secure investment. But it's also related to the cultural and social significance of being able to claim ownership of a home. Currently, that is also somewhat true in the US, although not to the same extent as it is in China. In China, it is so important to claim ownership of a home that the ratio of home prices to earnings doesn't even sound realistic. For instance, the average home price to income ratio in the United States is roughly 4.7 times. That is to say, if you earn $50,000 a year, you would be accepted for a maximum of $230,000, possibly as high as $250,000. However, that figure in China might range from 20 to 35 times the average person's yearly income, which is unbelievable. Real estate sales account for about a third of China's total revenue, which is how businesses like Evergrande grew to such size. With over 1,300 development projects spread across 280 cities, real estate's toxicity and widespread greed have affected the entire Chinese economy. Evergrande's collapse is the first domino to fall, but they are not the only company to stop making loan payments. Alternative assets, according to some experts, are the solution, and actual assets, such works of art, can help a portfolio the most. Just have a look at the information from the day after Lehman Brothers went under in 2008. Art has outperformed the SP 500 by more than double over the last 25 years, and Sotheby's sold $111 million worth of artwork in 2008. As a result, my friends at Masterworks are seeing a higher demand that they can handle. by providing fractional investments in top 1% of the art world and generating amazing average net returns of 26.8% despite COVID, a bear market, and heated inflation. They're assisting people and maintaining their financial security. We must also point out that the past success does not guarantee future success, but it should come as no surprise that over $500 million has been invested with them. Demand is at an all-time high due to the recession, looming anxieties, and the fact that they is unique to every investor to ensure that the art is appropriate for them. So far this year has resulted in the distraction of about $90 billion worth of real estate developer value, proving that the collapse of Evergrande last year wasn't the only one. 4 additional significant real estate developers including Sunac, Kaiser Group, China Aoyuan, and Shimao Group have been delisted from China's own major stock market index. Over 60 real estate developers collectively owe $13 billion in bond repayments that are due this year, and things don't look good because many of them have already requested extensions, and some of them simply lack the funds to make payments. Consumer confidence in China has recently hit a record low, and home sales and home values are beginning to decline. No assurance can be given that the Chinese economy won't have a default very soon. And we have to admit that the Ponzi scheme was practically flawless. They just missed one step. Build and pre-sell home in step 1 and excessively inflated appraisal values. Use the profits from step 2 to partially complete even more projects. Ask for additional pre-sale money in step 3 before any of them are completed. And then make a mistake in step 4 because you failed to anticipate a global pandemic. As a result, everything had to be delayed, which annoyed people because you couldn't complete their projects or pay them back. And step 5, defaulted and collapsed. Property sales in China are predicted to decrease by about 30, which is a significant decrease from 2008, when they decreased by 20. Warren Buffett is really disturbed by the fact that nearly 70% of China's wealth is related to real estate. In a normal situation, this would be okay if they had just followed the fundamentals of investment, which is to diversify their portfolio. 7C is not at all diversified, and that's basically investing fundamentals 101. The trillion-dollar question the world wants to know the answer to is how bad things will get, and how this will affect investors around the world. But now that China is in this situation where people are protesting in the streets, people have had enough, and the Chinese economy is on the verge of collapsing. The truth is that no one really knows because a lot of the data is obscured and hidden from the public, and a lot of that has to do with keeping up with the app. That is also the reason why the Chinese government has decided to sanction a bailout, as any government would do at this point. China recently approved plans for a $44 billion bailout to assist the struggling real estate developers complete their outstanding tasks, to regain customer confidence, and to restart their musical chairs game. Unfortunately, this merely encourages more careless spending and corporate greed because who cares if the government bails you out anyway? And why adhere to the 3 red line policies guidelines if that's also going to be disregarded, which was designed to limit the amount of leverage they may assume? For these reasons, the collapse has already occurred and is now behind us, but the rest of the world is still unsure of what impact it will have. Perhaps there is someone out there who is aware, but it's not me. It was predicted that this Lehman-style collapse would occur in 2015, then again in 2017, then again in 2019, then once more in 2020, 2021, and of course, 2022. When the majority of their bond payments are due in 2023, it might occur this year and the following year. The rest of the world must simply wait and see for the time being. Be cautious, remain safe, and just understand that important events are happening all over the world, and that no one really knows what will happen in the near future. And that's all we have for you for today's video. Thank you so much for watching, and what do you think about China's economy today? Do you have any thoughts about it? Feel free to share them in the comment section below, and we'd be more than glad to join you in the conversation. Once again, this is Investing Path, and if you'd like to see more of our content, then feel free to click the like, subscribe, and bell button for more. Thanks again, and we'll see you in our next video.